and prepare in 10 seconds to go live. Good luck. We'll be in the backstage, all 41 guests.
Wow, that's good.
Cool. All right. So first of all, hello, great to have you here, all of you. Welcome to our fireside chat with investors. Hello from Piotr Nemts, from Rubik Hub. Welcome to our humble crib. Before we start, I would like to give a bit of a context so everyone understands where we are and why we're here and why we have these great speakers next to us. Please bear with me for a couple of minutes for this quick intro. This event is part of the Black Sea Climate Accelerator program supported by the European organization Climate Kick and organized locally by the Climate Vertical Romania, Impact Hub Bucharest, Innovation Starter Bulgaria. So today we have two countries in this conference. And I can say we live actually a historical moment for Romania and Bulgaria, especially in the process of fighting climate change, because we have launched the first Climate Accelerator program in the region. And very important and over expectations, we have 42 startups selected out of 200. Who would have known that we have 200 startups here working on a climate solution? And that is amazing news. The 42 startups are divided in 3 parallel stages: idea stage, MVP stage, and already launched startup. A good thing that happened with this program, we've managed to attract a budget of 300,000 euro grants for these climate startups to kick off their startup. And I think now we are close to live a dream that I'm having, to have the next unicorn given by Romania and Bulgaria, a climate startup. Of course, everyone knows already the unicorns we have, such as UiPath, but the next one, I hope it's going to be a climate one. Our agenda today is as following. We will have a public 1-hour fireside chat from 6 p.m. to 7 p.m., followed by a private session with the 42 startups selected in the Black Sea Climate Accelerator from 7 p.m. to 8 p.m. So the public event will end up at 7 p.m. I'm happy to have today next to me 3 people I highly appreciate for their values and most important for their give back attitude and impact focus. That's why they're here and that's why we are happy to have them here. They give their time in order to help you get your business straight and start approaching investors, very important, the right way. So we're having next to us Paul Kalmes from San Francisco, co-founder of Angel Accelerator. He's a VC fund advisor and IP consultant, especially for the US market. Nino Subotic from Malmo, co-founder of Your Local Hero and from Kala. Now he's accelerator co-lead at Fast Track Malmo. And Oscar Kneppers from Amsterdam, entrepreneur, investor, speaker, and very important, yogi and runner. Probably he will mention later on how much he's running in a month. I'm amazed about that. He's founder of Emerce, Bright, Rockstart Accelerator, and now building House of Origin. Welcome, guys. Happy to have you here. So I would like to start because I have many questions. And Paul, Oscar, Nino, you are stuck with me in the elevator. You have nowhere to run. And I would like to start with what I call a disruptive intro of yourself, one that will help us better understand your mindset and your focus. So here we go. Let's imagine you are on your bicycle. We love it, right? Climate friendly. You are on your bicycle at a stoplight and a startup founder is recognizing you and starts pitching you over the sudden. You like the guy, you like the idea. What is the first advice you give him until the stoplight turns green?
Keep it up.
Wear a helmet, like it's going to be a bumpy ride.
That's a good one.
Yeah. This must be Sweden talking. Yeah, it's true. Yeah.
Okay, Paul?
And I would say here it's obey all traffic laws unless they get too much in your way, in which case find a way. Like run a stop sign if you really need to. So otherwise ride safely. So obey the rules up to a point. Don't be afraid to break them if you can do it without hurting yourself and to get where you need to go.
Yeah.
Love it. Okay, I'm not going to share mine because it's too serious. I will keep going. In a nutshell, we will be discussing about what investors look for when early stage teams are pitching them. So for that, we are going over a quick journey. I love building things in a journey format. So the journey today is we will ask questions and learn about what is the path to get to investors, what to present to investors, and then what to ask from investors. Okay, I hope that is a fun journey. So let's get our helmets, bikes, and let's start the ride. Guys, I think an action that is overlooked, and it's pretty important from the beginning, is how you choose the investors you are willing to pitch. I've seen approaches, let's send our pitch deck to everyone, and whoever wants to invest in us, perfectly fine. Or others that are carefully selecting to whom are they sending their pitch deck. So what should you do? How should you approach investors? Should you approach sector agnostic investors or with vertical focus? What's your opinion on that?
That's a difficult question, because at some point in time, if you've been trying the obvious paths and you have reached out to the first ripple in your network and then the second one, and at some point people start sending it to like everyone who has an email address, and even sometimes that sort of catches something, but that's not the catch you want to make, I guess. So it's, for me, I guess what I felt over the last 10 years in guiding hundreds of startups is that it's every startup looks good, every website looks great, every story sounds or feels if you read it authentic, but if you really dig deeper, it's not always the case, or in many cases it's just not the case. And I guess that it's vice versa. The same goes for, so people always talk about due diligence when it comes to investing, and it's a two-way street. So you need to know who you're sending it to if you have a pitch deck, and make sure that you first reach out and then follow up with a short deck. From my standpoint, it's like 7 slides, not more, and make sure that it really has been in context before they start reading it. But do your homework before you do that.
Yeah, I usually say, like, to be interesting, you have to be interested, right? And if you're interested, you really check out Oscar, right? And what he likes, or what he has invested in before, or if that he loves yoga, or that he's a runner, and like connect with the other person. Yeah. I've seen like cold emailing work, but for it to work, it should be super, like 1 or 2 sentences, like 3 bullets, and with traction that if I don't check that out, this company, I will get fired, basically. So the month-to-month growth, or like 20% or whatever. So be super clear, be interested, to be interesting, and yeah, that is what I would say about that. What do you say, Paul?
Well, raising money is a low yield game at the best of times. No matter who you are or what you've done, it's still hard to raise money. So like both Oscar and Nino have said, you've got to make sure that you're talking to the right audience, and there's no one right audience. Due diligence on your part. If you can afford a PitchBook account or tag along with somebody else to identify investors who have a history of investing in your space. Obviously, warm connections are the best. Those are hard to come by. So the more you network in life in general, the more likely it is you're going to find someone to make that kind of opportunity. Yeah. Be brief. Make it clear to somebody. As we say, you only have one chance to make a good first impression. So make sure that you have something that states the problem, solution, and your differentiation, if possible, in the first couple slides. Even an introductory email, without sounding too patronizing. Hey, did you know how big this problem was? Oh, they probably will, and don't have a patronizing tone, but be polite, be assertive, and say, look, if it's not for you, any ideas? If you want to pay it forward and pass it on, I'd be most
that's really a good one. The last one, yeah. Make sure that if they're not interested or just not capable in getting into this, who would you recommend to send it to or to share it with? And could you name 3 people?
Yeah. As we say, do me a solid, which means give me some ideas, and oftentimes people will, because it's hardly any more work for them, and then they're done with it.
Yeah.
And also, I'll just like tap into what Oscar said about, like, how many slides are you sending? Like, and what is that? So you're sending out an email. So what is the goal? What is the next step? Like, think about the next step. You want to come to that, like you want to get that meeting with that person. So you don't have to like, just like in early stage investing, like it's so hard. Like you just don't know, right? Like we can have 500 applications. We can like select the top 20, but we really don't know who's going to make it. And what I look for is like the team. Do they have unique insights into this problem? Are they the team that is going to solve this kind of new future? And that is like often the first thing I look at, and make sure that you show all the logos, all the things you've done before. If you don't have all the logos, be the best person in the world and just like the one who has the best insights in that problem, and that you've done the 1,000 interviews and everything around that. So optimize for team and to show that you're the right team saw this.
Yeah.
Oh, yeah. I have another question related to what you are just saying, Nino, right now, but I would like also to say a bit here in how to approach investors. I remember back in 2016, 17, going to events or pitching events or large events, conferences, when you were mentioning you are an impact startup or discussing about impact startups, investors were not necessarily keen to jump into a discussion with you. They were perceiving something like an NGO doing something good for humanity, but not necessarily returning back the investment, eventually 10 times. Since then, things have changed. We are having big time, exactly. We have VCs that are focusing only on impact and only on climate. Now, having this new type of VCs, should they be on top of your list? Should they be a priority for you? Should you approach the other ones as well, the sector agnostic ones? What do you think?
Well, I'll play a bit of the cynic here, which is that I've talked to impact investors. They're impact investors they've stated that's what they are, but never forget that they still have obligations to make successful investments and keep their LPs happy and meet their IRR targets and all this. And so it's a balance they have to strike. And so part of your diligence is really get to the core of what is their belief. How much of an impact investor are they? Keep in mind, there's a lot of different tensions that VCs face when it comes to deciding on investments. And some are in different positions. If they don't really care what happens, which aren't that many of them, then they're probably willing to go all in on a risky impact type investment. But it's worth keeping in mind that they have pretty much all, as a class of business people, focused on one thing: maximize the return on their investments and having as many successes as possible, which might be 2 in 10 instead of 1 in 10. And I'd say woe to the entrepreneur who forgets that. Don't be fooled by just talk of having impact. Dig down deep. You have to. Otherwise, you could get an unpleasant surprise.
Yeah. Cool. So what do investors look for when, please, Nino. Yes, please.
Yeah, I just have a small one. Like, so you ask them, who do I reach out to first? Do I go for the top tier VCs that I know, like, invest in climate tech and they are the best in the world? Or do I like go for tier 3 first and practice my pitch and get like a lot of advice and try to like figure out things? I would say start with the bottom, like the top, the ones you can get into a room and look for FUDs, like fears, uncertainties, and doubts about your pitch, about your project.
Yeah.
And then slowly go upwards to the tier 1s. I can then, because like I think it's like you need to do like 65 meetings or something to get a seed, like to raise a seed round and so think about that. And like the first meetings you take, you will probably suck. But if you're really open and ask for advice and really try to get better at what you do, so start with the tier 3 and work upwards.
That's a good idea.
Yep. Refine your pitch. Debug it as you go.
Yeah. Debug it.
And good info, I would say, for most of the startups. So you need 65 meetings in order to get closer to the seed investment. That is actually not something easy to comprehend by many of us. After the third rejection, you get afraid.
Or you don't care anymore, and you can go on and bring it on. Bring the rejection on. I can take it.
What else do you do? Start something new? No, you have to. Yeah.
Yeah, but also like just figure this out. Like it's going to take shitloads of time. I'm sorry, I'm going to curse a little bit today, but it's going to take a lot of time, and time that is taken from you building your company. So you have to figure out who is going to take all these meetings and who is going to lead the the fundraising part.
Mm-hmm.
So what actually are investors looking for when raising your first round? What in particular are they looking at this stage?
Team, solid team. I guess that the pressure that's on a team in the first, say what we mentioned as the first 1,000 days, but let's say the first 2 years, the team will be under high pressure, and it will change. So I guess that the first thing that we looked at is team. Can they withstand this pressure? Are they able and willing to pivot? Are they really holding on to this original idea that they can't let go of? So that's a character thing. I guess that's the one thing I would be looking for is are the individual members of the team strong, and does it work as a team? And it's you need to see them, to meet them, to look them in the eye. Yeah.
Well, certainly Oscar's hit the biggest point of all, because the team is often all you have at the earliest stage. I do a lot of boot camps for startups at various stages, sort of ideation up to raising A rounds. And the thing I always try to drive home to them is that investors invest in businesses, not projects, not cool ideas, not proofs of concept. They invest in a business. So you've got to show that you understand what it means, not just to develop some cool app or whatever it is you do, but that you know how to build the proper framework around it to function in the world at large, because nothing happens in a vacuum. And if you don't have a business, then if you go to a corporate to look for a partnership or just to be a vendor to them, they're going to look at you. And if they don't recognize you as a business that runs along normal business structures, you don't have much chance. A lot of people seem to forget that. It's not surprising. Most first-time founders, early stage folks, have never run a business before or built one. But I strongly suggest understanding all the different aspects, even the boring stuff like HR, corporate governance, and accounting, the things that make a business a business. Without it, no good investor will touch you, and they shouldn't. So it's a good lesson to learn, but keep in mind there's a critical mass of knowledge you've got to be able to apply to what you're doing to make someone believe that you're a safer bet to put their money in than somebody else is.
Yeah.
So.
Cool. Any opinion on this? No, I can move to please, Nino.
No, I'm just echoing what the guys are saying, and maybe we can talk about that later. But when you're looking for, like, what kind of risks do you see, like in an early stage company? The team is number one, right? Because you're going to pivot maybe a couple of times. You never built a company before, so like first time founders have a harder time raising capital. Female founders have a harder time raising capital. We know that by numbers. In Sweden, I think like only 1 or 2% of the total raised capital goes to female founded companies. So then we have the social economic aspect of things. Underrepresented people have a harder time raising money, and no, it's super tough to raise a seed round. It's super tough. It's like I talked to Kpis, one of the Swedish like biggest funds, most like the Klarna and Spotify and whatnot. They see like 4,000 or 5,000 pitch decks every year, and they invest like I say 10. There's a very small chance to get an investment from one of the best VCs in the world. So you really need like. I usually talk about it like you're training for the Olympics like in 8 years, and you're going to win the gymnastics like or something like that. So you're really like you're going to grow from like this three man or woman team to like 400 people, and you're going to develop like crazy. So you're going to sleep a little bit less and don't have time with your friends and eat right for 8 years to win that gold. And that is what everybody's looking for that team who is going to win that category and become a unicorn in that market. So there's a lot of things you need to show.
Let me add one more quick comment, is that oftentimes, at least around here, because people see so much, investors look for a reason not to invest in you, like a fatal flaw of some sort, because there's so many things to choose from. It's like a beauty pageant. I hate to say it, but it's like a beauty pageant. And a slight flaw might make somebody say, I'll pass. they're not going to say, go fix that and come back to me. They're too busy. So again, you need to be ready to answer any questions about anything that might come up, because if you can't, then you probably severely damage your chances.
Mm-hmm.
Yeah. Usually they have a thesis about the future, right? The VC, and they have a feel like we want to invest in this future. They see the same deal, maybe from like one from Spain and one from the States, and with the same tech, with the same everything. Then you have the team and how well this team can tell you a story. So there's very like small things that makes them want to invest or not at the end, I think.
I think this
Oscar,
is also,
do you have anything?
I will just highlight good information you just gave, Nino. VCs have a thesis, and startups should read that, understand that before approaching them. It's very important. There you see the matching from the beginning, the potential matching, or at least it's a courtesy thing to do before going and discussing with them. They would expect you to know, for you to do your homework before they know who you are talking with. So that's a very good point also. We've discussed about how important for an investor is to avoid risks, right, when investing in startups. And they look to the team, to their capacity to build a product, maybe if there is a product market fit, if that can be scaled, what business potential is there. So these are all technical. Let's go a bit into the soft side. Is there any soft side? Do VCs investors look to other things like values, confidence, optimism, other things than just the technical ones?
I think Oscar said it already, is that are they so attached to their ideas they won't let them go? Are they teachable, coachable, adaptable?
Yeah.
If they're not, that's a death knell on your pitch, and any good investor will sniff that out immediately. So really be open to change, because you don't have all the answers. That is for sure. So don't be afraid to get input from others and consider, maybe it's different than your view. It's worth considering. If you don't demonstrate that, very unlikely you're going to raise a lot of money.
Would you say that there needs to be, Paul, some kind of, let's say, click between people in this first meeting pitch? What do you think?
Yeah, I think chemistry matters. I think, but it's up to you as the person looking for the money to understand where they're really coming from. And I like the idea of starting with maybe third-tier investors. Practice that, get a feel for the vibe in these. If you have an outlandish idea, and let's face it, a lot of climate ideas are fairly outlandish or might seem unlikely for the next 20 years. So you're going to have to be confident, but also willing to acknowledge, maybe I could do something a little differently, or take a slightly different tack, or a substantially different tack. And I think if you demonstrate that openness from the beginning, you could say, we really believe in this, but we understand that we don't have all the answers going forward. No one can see the future. So we understand that if something else happens, whether it's regulatory or economic or social upheaval to get in the way of things, I mean, climate issues are complicated. They affect so many things and are affected by so many things. You've got to factor in a lot of information to be credible. And that openness to change is certainly probably the softest thing of all that investors will value.
And selling a believable story for a long-term solution for a long-term problem, that is a hard thing. And then you need trust and empathy and everything that is sort of bringing this to another level than just business or figures, I guess.
Yep. One relevant example, I think, is I saw a feature about a carbon capture facility in Iceland, and it was modest. It would capture 20,000 tons of carbon a year. And the interviewer said to the person running the plant, well, isn't that kind of nothing, a drop in the bucket? And she said, you got to start somewhere.
Yeah.
Right. And that's absolutely true. Even if it's unnoticeable, and frankly, it probably is. The point is, she's setting an example, and if the rest of the world takes it seriously, at some point you'll get some real impact. So that was good on her for standing up in the face of skepticism about the tiny amount they could actually capture.
Yeah.
I have a question, like to you and Oscar, Paul. Like, so when you're investing in somebody, like you're saying, hey, let's go, like let's hang out for the next 7 or 10 years if we're happy, and we do an exit, and everybody's happy, right? So you're going to spend time with this person, and you will not want to spend if the team is not right, or the people that feel like we don't vibe, or we don't like this is not going to be a fun ride. I think that is like a little bit like underestimated as well. At least I think about it a lot.
Absolutely.
This is it. 7 years at least. So I guess that is the number of years that you'll be together in this ride. And you're right. Really, look at that long term. Yeah.
And I think, Oscar, you're Dutch, right? The Dutch are known for their candor and their straightforwardness. And although some people find it off-putting, I think it's really, really valuable to set the playing field about what you expect from the other person in terms of expectation, performance, delivery, modification. So I think all the startup founders listening, you've got to be that right combination of confident and assertive without being stubborn or think too highly of yourself. It's a combination of modesty and confidence and a willingness to acknowledge that the world might have other ideas. If you don't demonstrate that, I personally would want nothing to do with you. Mm-hmm. And I do a lot in the Netherlands, so I learned a lot about Dutch candor and straightforwardness. And I'm not quite as good at it, but I practice it myself. So yeah, I think everybody else should look for it and practice it too. Better to be upfront with bad news than hide it and have it come out.
I don't hear that too often, but that's a good point. Yeah. Yeah. Tell that to the British. Yeah.
Well, they've gone isolated themselves, so good luck to them.
Yeah.
So when you approach VCs, you actually should get ready for a marriage over there. Actually, the average time spent in a marriage, I think, is below 7 years.
Really? Okay. Well, not a good marriage, but I guess that 7 years is a long time for a good relationship, right?
Yeah.
Yeah. Yeah.
Which
and a bumpy ride as well. It's that, yeah.
Okay.
And sometimes it's fun.
But you also have a dual role of being the person's supporter and believer in them, but also holding them to a certain standard of performance and accountability. So you've got to be the disciplinarian at times too. So I think it's also find VCs that demonstrate that awareness of both sides of their behavior spectrum. They've got to be supportive and encouraging and helpful. They've also got to be demanding and hold you to account and make sure you're doing what you said you're going to do for them. And if not, why not?
So trust is a big thing. I keep forgetting that, but trust, that this level of trust that you're next to each other for this long ride. Yeah.
Trust and transparency. Absolutely.
Yeah. Yeah.
Cool. Love all your tips and suggestions. So I'm taking notes. Maybe I do a summary at the end. In order to make sure you are building what is critical as a startup in your early stage, what should be the main KPIs you should look to? I think Nino have mentioned already month-on-month growth, but how can we develop here this topic of KPIs? I myself, I see very often startups defocused, working hard, many hours per day, but not necessarily progressing from a week to another one in building their business case. So when asking them,
our spend is not a KPI, right?
Of course,
it's not. Yeah. Okay. Mm-hmm.
Yeah. So what is it important? What investors consider important for startups to have something that they look to it each week, maybe each day, and they discuss about it and they monitor how they progress on that?
Well, for me, it's so one of the knowledges that helped me a lot is like time equals options or opportunities. Well, at least options. So some kind of progress, even if it's just +1, is any kind of progress, any one new client. If you can sell it to one person, you can probably sell it to 1 billion as well. So you need then to have time in order to prove that. So in the beginning, you're just selling a promise, and for a pretty long time. And if you have some kind of proof as early as you can get it, that it works, even for just one person somewhere, then the only thing you need is time to actually double that or triple and quadruple. And for me, is moving from promise to prove in any which way in this early stage. That is the most critical thing that I would look for.
Promise to prove.
I don't know if yeah. Love it. I don't know if you're looking for some metrics here, Vlad, maybe, but depend. Like let's say, like in pre-seed stage, like what I'm looking for is like, do you have a team who can build something? Like, can you create a MVP? Are you building something together with your customers? So some traction with the MVP. If you don't have a product out, you would like to see them gathering emails, or you just want to see that there's some traction, that the market wants, that the market is like starting to pull that kind of product out of the team. And then for a seed stage, it's a little bit different. I mean, and these are like, the numbers are crazy right now. The amount of money raised in Europe and the States is crazy. So what we knew like 2 years ago is probably different today. But if you have 10K euro MRR or something like that, you will like, that is kind of showing that this is something people would love to invest in, or maybe 15. But also like, how do you measure product market fit? So I encourage you all to start thinking about that. And there's a lot of way of doing that. Sean Ellis has a way of doing it. He's like asking, it's a questionnaire, and like if 40% or more of the users or customers are very disappointed if they can't use your service anymore, that would like indicate product market fit. That's one. And there's others. I mean, Superhuman did one as well. And otherwise, like, retention is the best way of showing product market fit. So there's a lot to read out there. But if you have a consumer app, for example, and 30% of all of the users come back within a month, for example, it always depends on what you're building. But you need to find those numbers that indicate that people are super happy and they're coming back. And if people are paying for your service, that is like the ultimate. Yeah, if somebody's paying for it, then you know that. Yeah, people like, I don't know who said it. What is it called? Like if one, or Oscar, like if one pays for it, it could be billions who could pay for it as well.
Another thing, if you mentioned product market fit, like the emphasis is always on product market fit, and especially if there's a little money in a company, the founders tend to work on the product, and mainly the product, and everything is the product is number one. I guess you should be showing from the start, or even one in the team of let's say the hacker hipster founder team, but one of the three at least should be focused on what's happening in the market and have this awareness of what is changing in the market. Because if you focus everything on batteries and you're not looking at what's happening in, I don't know the English word, waterstof, right? So to other sources, what's happening in the market, where analysts are looking at what's going on in the press. I guess that this awareness of how the market is developing instead of only looking at the product, that's one of the other things that I would really look at.
So I want to address that. I was waiting for someone to mention the market and competition and all that. So Vlad, I'd like to preface it by saying that KPI implies, indicator implies like a solid measure, like something's a meter long or it's not, right? That's a yes, no with a hard answer. Early stage startups and the progress they make are not necessarily as firm and the ability to measure them, right? There's lots of things, the soft skills and all are very, very different. So having said that, I think an early stage investor needs to keep track of the team's attitude, the team's enthusiasm, their tenacity, their belief in what they're still doing. And you can figure this out over time if you meet with them once a month, once a quarter, have board meetings that are sort of all out discussions of everything that's going on. You got to take their temperature, make it clear to them that you care how they feel about this, because if they start to lose enthusiasm or motivation, or team members start peeling off, then you've got a real problem. Having said that, to Nino's point, traction is the ultimate validation of something in a marketplace, but it's not only revenue. It can be a joint venture agreement. It could be a license agreement that's going to kick in a couple of years. It could be positive press by some, well-known practitioner in your field. It could be a profile in the news that no one sees, but you can spread like crazy through social media. So traction comes in many, many forms. Yeah. And then to Oscar's point,
that's a very, very good quote. Yeah. Traction comes in many different forms.
It really does. And I spend a lot of time with my company saying every bit counts. Don't overplay your hand, but don't neglect something because you think it might not be important. Let somebody else decide if it's important. So I'm going to post I just posted a link about looking at competitive landscapes. Most startups, I'm guessing at least a few on the call today, do their competitive landscapes with a grid, a 2x2, 4x4, 6x6 grid, and their columns are all green checks, and everybody else's column, no matter how big they are, is going to be a bunch of checks and X's. What I just sent by this guy, Steve Blank, a well-known thought leader here in the Bay Area, is a great way. The diagrams, his so-called pedal diagram, is a great way not only to characterize your competition, but to help you decide where should you focus and where should you not. And are you tracking what goes on? Are you looking at M&A activity, companies disappearing or ramping up their efforts in certain places?
Yeah.
You know, I think back to 1995. Those of us old enough to remember 1995, when Microsoft decided to take the internet seriously. You know, 25 years later, that changed everything, to be sure. If they hadn't, it would have been a much different evolution. So it's your responsibility to master the competitive landscape and to track it on at worst a monthly basis. You cannot be too well informed about the actions in the marketplace that could affect you. So do your reading, spend your time reading. That's time well spent. And take a look at that link. I think it's very useful.
On a small side note, like when we talked about the market versus the team, I think I don't know who said it, but like if you're in a good market, even a shitty product will win, right? So that would just like pull that product out of that team. So the market is probably number one, but of course team is there with it. But you have to have a market. Otherwise, it doesn't matter how great your product is if the market's not there. And if we're talking about VC money today, if you can't market, it's like nobody will invest in you. They will not invest in you if you just like say we have like 50 million ARR. Maybe they will, but they you know, just like you need to like every investment in the portfolio needs to be able to cover the whole kind of fund. So that is also something you should think about, like when talking to funds and how big they are. You can like figure out how big bets they need to do.
Mm-hmm. Yeah, what we are doing pretty often, we find ourselves discussing with startups about revenue and number of users, or revenue growth and user growth. Even though they don't have revenue yet, we ask them to think about it. So to align everything you are doing towards getting that revenue. So to get revenue, you get users. You have to grow the base of your users to make them happy, understand their needs, build something that they need, so they start paying for that need. So we work with these metrics, KPIs in general, but of course, then there are other ones that are important depending on at what stage are you and what you're focusing on at that moment. But I think it's important for all startups to have some metrics that they stick with them for a period of time, 3, 6, 12 months, and they build on that. Otherwise, it's easy to get defocused. Either you build a great team, but nothing on the product side. Either you go on the product, but not the market understanding, not necessarily the building the team and the foundation of your business. So 2 metrics, 3 maybe, that would actually become your North Star for the first month of your existence. I think it's critical. Now we are in this area of metrics, revenue, users. I would slide the discussion towards validation and traction. I know VCs do love to see traction, and they are looking to have that proof of your business potential and product market fit by proving traction. Yeah, proving your customers do appreciate your product, and that is actually translated into traction. If you don't have traction, and also that there is a question how you can prove you have traction, but if you don't have traction, is it enough to show some sort of a validation? If yes, how?
If you don't have traction and you can't validate, then you need a lot of trust. So your story better be good, because sometimes you just can't prove any progress, right? It's look over the last 2 years. It's been stagnation for many people in many different areas, although it's been going fast in some other. But I guess that you need that's why you need trust and a very strong, solid story that you keep updating, not keeping just this one storyline, but take them with you, your investors, especially the early stage investors that have put money already in. Take them with you. They're on this journey with you. So it's a part that many people forget, because everything is moving different than you probably have planned or projected. And it's really very important to keep them close with that story. Yeah. And there's not always proof.
That's right. I mean, and in the climate space especially, how do you really show it meaningful impact? Get people, you look at the factors that affect funding here for climate or impact-based investments. It's crazy. It's so uncertain. You're standing on quicksand half the time. So I think we've already talked about traction, and find any way you can. You need to define what traction means for you and share that with the people around, your stakeholders, your investor, a corporate partner, because you may need to teach them what really matters to you. So you're, in a sense, you're educating your own market, meaning your potential investors, about what they need to look for, because they may not know what exactly characterizes traction for some kind of clever, is it a direct effect, an indirect effect? I mean, this is where the startup really needs to dig down into their value proposition. What do they actually offer? Who else is offering it, if anybody? There usually is somebody. And can they tell that story well? Can they create a vocabulary and a perception of what they're doing and get others to buy into it? That, I think, is, and some folks will and some folks won't. But I think just the exercise of developing those metrics, those measurements and indicators yourself, and teaching others about it, is a great way to solidify your position in the eyes of another. Yeah. Of course, you do have to back it up with eventually with revenue and partnerships and whatever else. Yeah. But still, you got to start by building that framework of trust and understanding, because every startup is unique. No matter how crowded a space, every startup is unique, and you need to make that uniqueness clear and how it benefits you, not how it detracts from your chances.
Yeah. Yeah.
Okay, so let's assume you have everything done as we discussed until now, and you're ready to go and meet your investor. I would stay a bit here to discuss about how should you get prepared for that unique opportunity to meet the investor. And I would discuss about what is critical to have included in your pitch deck. I would approach the data room topic. How important is that? How useful it is? And here, Nino has a good case about a Romanian startup that, with their support, managed to raise $2.5 million investment with a great data room. I will also share the link of that story. And also important for startup is how should they calculate what to ask for? How should they run their own evaluation? Yeah. So
for me, a data room sounds like you have been spending so much time on all these data for the investors while you should be working on something else, either the product or the market or the team or growing the team. And a data room is something that I associate with either exits or larger Series A, B, C investments, and not early stage. I guess it's if you start using those words or that language and that. I guess for me, it sounds like focusing on the wrong stuff in that early stage. Let's say the first 12 months.
Okay. Yeah.
I'm really curious for that story, what you mentioned about this great data room. But data room for me is due diligence.
Exactly. So what is a data room? So the backstory of this company. They did like 70 meetings with VCs. I think they had traction. So it's a seed stage company called Digital, a Romanian one of our better teams at Fast Track. And for them, it was like showing. So they did a data room in Notion, right? This is a year ago now. And it was for them like just to organize all the information they have, the pitch deck, the Loom video, the product the product, they go through it. But also just displaying the metrics they had. It's not super extensive, big, but it's more about showing that we're on track. We're measuring the right things, and we're super structured. So that impressed the investors a lot. But yes, they were not raising a Series A or a Series B where they had all this like metrics, which is like the thing that we're showing. They were showing that they were on top of what they're doing and structured and a great team. So they did really well there with the data room then.
Okay, I'm gonna take the middle ground between Vlad and Oscar, which is that yes, the data room does imply mostly data. It's not a feelings room or an emotional intelligence room. It's a data room. Early stage companies don't have that oftentimes. So there's only so much you can put in there. Don't try to bluff your way through with lots of elaborate forecasts and models that are meaningless because your assumptions are so broad. So don't try to fool anybody with that. But how do you impress an investor? What I always tell my companies, no matter how advanced they are, how much they've done before, is you can never be too prepared. You can never be too well practiced. You've got to have your material totally mastered so that when you're speaking to them, you're not just reading from a bunch of slides and that a question throws you off, but that the slides are a backup to you and you can have the conversation you want to have or the conversation they want to have, which might be different. So you have to have your topics mastered, know what you don't know, and don't try to BS your way through it. You will get slaughtered and your credibility will be destroyed. I absolutely guarantee it.
That you absolutely understand the market and your customer, that you understand them and know what. Exactly.
And I assume everybody knows what I mean by BS when it comes to trying to convince somebody you know something that you don't. Much better to be humble and to admit you don't know something or you're still learning than to try to fake your way through it. Seriously, it's the integrity you project, even by saying, I have absolutely no idea what that question means, will go much further than trying to give some crappy answer to it, believe me. Because a good investor will sniff it out instantly, and that's it. That meeting is over.
Yeah,
definitely.
So I cannot answer that right now, but we have it in our data room.
Or we'll go find. We're going to go find it. It's out there somewhere. We're going to go find it.
And the data room they sent out, it was like later on in the process with the investors. It's not the first thing that they send out, right? So just to make that clear as well. But I agree with both of you. I think, and also like what we advise our companies is not to raise in the first meeting they have with the investors usually, because it's about creating this relationship with another person, right? And if you're on Zoom and meeting somebody for the first time, I don't know, like if like asking for advice and if you ask for advice, if you ask for money, get advice. Ask for advice, get. Ask for the opposite route.
If you ask for money, you get advice. If you ask for advice, you get money.
Exactly. So that is the way. Exactly. Sorry. So that is the way of showing that you are an interesting person and willing to learn new stuff. And for investors, they usually don't invest in somebody that is not known, and there's no introduction, no FOMO, no other GP calling you, let's co-invest. If you're not on that level, just meeting somebody the first time. Be really cool and show that you're a great founder, and then keep them in the loop and show them the metrics that we talked about a little bit, that you're working on something, that you're learning stuff. And then when you know that the timing is right, when you know that you're able to raise a seed round with what you have, then do it super condensed, and then contact all of these investors you met the last half a year and say we're closing around in 6 or in 3 weeks or something like that, and then start working with that FOMO.
Mm-hmm.
That is what I usually give. I give that advice.
We all agree a pitch is important, and a pitch deck also is important. What that pitch deck should include? What are the main 7 slides we should have there?
Let me make a general comment about the pitch deck. I think I mentioned it before. The pitch deck is not the point of the presentation. You are the point of the presentation, your value proposition and ability to convey it. The pitch deck has to support that without distracting from it. Because the more time, I had a deck this morning with a review, had 39 data points on that one slide. And I said, you're killing me here. I have absolutely no idea what you're saying because I'm trying to make sense of this crazy slide you've done. So, and I understand that no one pays as much attention to every detail on a slide like you do. Believe me, we all want our work to be taken equally seriously. Doesn't happen. So the goal in a presentation setting, your 7 key slides, I'm sure the 3 of us would have some overlap, some differentiation. The important thing is that you have enough substance in there that you can convey and the slides back up. Not that you just point to the slide and say, please, or read it out loud. The worst thing of all is to read your slide to somebody else.
That you're competing with the slides, right? Or the slides are competing with
or
the
slides
story.
Competing with you.
Yeah.
It's not helping it's not helping your cause if it's distracting. So Vlad, there is no magic 7. There's no magic 20 really, because investors are different. They're gonna prioritize different things. You need to show what you value most and see if that gains traction with them. Because if what you value most is one set and what they value most is a totally different set, there's probably no hope in that meeting, and that's okay. Good to know early rather than try to pursue someone who's simply never going to bite. So I think
maybe the one thing that is what I keep seeing is that, okay, sometimes you have a slide deck or you have heard a story that's really good and it's well supported by a good deck. And then I'm trying to show someone else being enthusiastic about it, showing someone else that hasn't been in the room. and say, I love this company, they're doing this really well, blah, blah, blah. And then showing the deck, and then it sort of, it doesn't support the story that I still have because I was in the room. So think about what it means that if the one that you're presenting to has to relay that story to someone else, the deck has to be clear from that point of view as well.
Okay. Myself, I do have in mind some areas you should cover when getting ready to present yourself to the investors, such as what is the problem you're solving? How are you approaching that? What's your solution? What is your product? How does the market look like? How much of that market you want to get? Of course, how is your team who will build that? And also important, what is your ask? And here is actually what I would like to get right now. How should startups make sure they have the right evaluation when they go and ask for investment?
Valuation or evaluation?
Valuation.
So what are you asking for and what are you going to spend it on?
Exactly.
And what does it lead to?
Yeah.
Yep. That's my answer exactly. Well, and can you justify the assumptions you've made to ask for the money you're asking? What I often see, I think one of the cardinal sins that startups commit is that they'll have an ask, okay, we want $4 million. And here's our use of proceeds. It could be a pie chart with 3 or 4 slices, 20, 30, 30, 40, make it add up to 100. I've seen it not add up to 100. And that's going to feel like you just kind of called it in. That doesn't show a great deal of discrimination that we need X number of programmers in this country. Let's say if you're going to do it in Ukraine versus Silicon Valley, you're going to be paying substantially different amounts. So your use of proceeds should be built from the ground up to get to the point you want to get to in a certain amount of time. So the amount you ask for should be a number you are able to derive from assumptions and knowledge that you've gained so far, build it up, add 25% and say, this is our starting point. Then you can justify all the assumptions you've made. Secondarily, if it's an equity round, you may say, well, we think we have a $15 million pre-money valuation and we hope you agree with that. And they might say, sure, we agree with it, or more likely they're going to say, we're thinking 7.5 is a better number. It's not up to you. Yeah. It is not up to the startup to define the value of a company. And on a convertible round, if you're going to then, because there's a variety of flavors of convertible notes, I don't know how common it is in Europe. Over here, of course, it's the norm for early stage. You have to know the details of everything of the convertible note you're trying to pursue. If you don't, you're going to get killed. You're going to spend a lot of money on lawyers explaining it to you. Know your stuff. If you're going to raise money on a convertible note basis, understand every term in that you need to know. If not, you're not practicing, you're practicing fiduciary neglect in a sense that you're not looking out for the financial interests of your company. And it's good to know what these terms mean. I mean, Oscar, it is funny to talk about fiduciary neglect. I talk about boards of directors and corporate governance to startups. They're like, what are you talking about? I said, if you're going to raise money ever in A-Run, at least at the A-Run, you're going to need a board. A well-built board that you know how to manage. They're like, really? Yeah. I said, yes. Yeah. So
that's no fun.
It's no fun. It's the boring part. But I think when it comes to the ask, the amount and the method and the results, you've got to have a really good story. And don't be afraid. If you got to be prepared to change anything, be prepared to change that, because that's what's going to happen. But as long as they're on the same page as you in terms of openness about your chances and your path forward, probably a productive outcome. At least you'll learn something, whether you raise the money or not.
Guys, I have a question to you. So when a startup comes to you and says like, you just have like a 15-minute meeting with a founder, which is usually what I kind of have. And they ask like, do you want me to show some slides? I usually say no. Let's just talk about. Can you tell me what you're building, right? So you don't need slides in a meeting. Just like, can you tell me what you're building and who you are and why you are going to do this thing that you're like telling me. That is enough, right? So understand when to use slides and when to, like, what is the slides going to help you with? Is it to get you into the room with an investor? And how do you use stuff? It's a way of like, if you have a long deck, right? And if I ask questions, it's pretty great if you say, okay, I will show you a slide that helps you understand the things that we're doing here. So that is how I see it. I don't know what you say, guys.
I agree. The magic happens in the story and in the connection of the 50 minutes that you have, and the slide deck supports that afterwards, and it should clear that up or give more detail. But it's if it's 50 minutes, which is pretty long, it should be a connection and a story.
Yeah, but
I remember sorry, Vlad. I remember we started our day trapped in an elevator with you, which is not my best way to start a day, but I've done worse. And to me, the notion of the elevator pitch, which I assume everybody is familiar with, is that condensed version of what you're doing and why should somebody pay attention to you. So what I say is that, yes, both Oscar and Nino said it well about the early meeting. The magic happens in the story, and the numbers and the deck and the data back it up later. What I would say to somebody is you need to get your value proposition across as quick as you can and as clearly as you can. And I don't mean your elevator pitch. I don't mean your mission and vision. I say that the value proposition is the answer to two questions. What are you doing and why should anybody care? Those can be very complex answers, but that's what it's got to do. What are you doing specifically and why should anybody care specifically? The benefits, the differentiation from competitors, the long-term growth potential. That's what you got to do. And just trying to answer those questions, you and your team, I think you can learn a lot about what you really understand and what you really hope for. It's not always what you might expect. Those are really good exercises to go through. So it's all about preparation. Yeah. So when you are stuck in an elevator with some hotshot investor, you got 30 seconds to impress her. Make sure you know what you're talking about.
The challenge.
I love what Oscar said. Oscar said as well. So what does the investor bring with them to the team, right? So what do you remember from that meeting? What do you want them to remember? That is super important. Something super hard. I love this team, but I don't know. I don't really remember what they were doing. So that is something you can always work on.
That's actually a good tip, is that if you start a meeting, I use that often, is, okay, I want you at the end of this meeting, I want you to remember just this one thing, this one word, this one promise, whatever it is, and then build on that, and then end with that as well. And that's the one thing that if you've done it right, they'll remember and they bring that to the next room.
Thank you, guys. It's very helpful what you just said. Before I finished, I just have to mention this. We are in Romania, in Bulgaria. For startups, it's not easy to come and knock at your door. Before that, they need to get in touch with you and make sure they have a meeting with you, because it's not easy to travel, and especially nowadays in this context. So most of the startups do prefer to get in touch online first with VCs. So they have to send something out. They can do it as a story. They can ask for a quick call and just share it. But very often they're asked for a pitch deck. So that's why the focus was a bit on the pitch deck. But I'm sure you're right. I know the startups from West countries, from US, it's easy to run into a VC in a coffee shop, on the street, somewhere where they can just connect and click with the investor by telling a quick story, a value proposition, something to get attention. When you're
but you answered the question before. Like all the slides you mentioned, they're great. Make sure like the one liner that you have, that is like that. Also, I take it from Oscar as well. Like, what are you doing? Who do you solve a problem for? Right? Make that sticky. But all those all the info is online. Like you can find like how to build a pitch deck everywhere. So there's no like kind of secrets to that, I think.
And maybe a good one pager that includes everything. It's just one page that's printable, and you can sort of print and fold up and look at it later, or show it to someone else.
Exactly.
Or
an executive summary.
One pager it should say everything. And if you like compress it a little, there's so much that can fit on. Yeah,
I agree. An executive summary
visualize
written and is super critical. So there's one last point I want to add, which is that startups often provide a context by saying we are the Uber of babysitters, or we're the Airbnb for dogs. And the other day I was talking to a guy in Africa, and he said, we're the Airbnb of Africa. And I said, isn't Airbnb in Africa already? And he said, well, sure. I said, so there already is an Airbnb of Africa. It's not going to be you. What makes you different than that? And it turns out that Airbnb in Africa caters mostly to foreigners visiting for safaris and high-end stuff. There is no real domestic Airbnb function for Africans visiting Africa. There's 54 countries.
So that's Airbnb for Africans.
Yes, exactly. That's what we said. It's Airbnb for Africans, not Africa. And that was
right. Yep.
Oscar, where were you the other day? I could have used you.
That's smart. Yeah.
But it was great. And it was, so he had the right idea. But the point is, don't spend too much time comparing yourselves to others. You will get diluted. If you say we're the Google of this, well, Google's pretty dominant, and you might people might get confused what you mean, because a startup is a simple thing generally, and a major company is a very complex thing. So be careful about the comparisons you make. Say we're better than Airbnb in Africa because it's for Africans instead of just the whole world. Or that's one of our focuses. So, so Vlad, just maybe I'm speaking for the group here. I'm happy to answer questions and, you know, review a pitch deck quickly, or, you know, help. So I love helping people out. And, you know, I was in Romania 2 years ago right now. I had an awesome time there in Piatra. So I'm just going to post my email address if that would help. People can reach me anytime. I mean, there's 168 hours in a week. You got to use them as wisely as you can. So I'm just going to post my email. Reach out anytime or go through Rubik Hub. Either way, it's fine with me. That's what I like to do. That's what I like to do.
Thank you for that.
Yeah, you can share mine as well, Vlad. I'm not sure I can find the. Yeah. Okay.
Yeah, we'll probably have questions, and startups will show their interest directly to us, and we'll do.
I hope so. That's why we're here.
Before we end the public session, a final advice to climate-focused startups from your side?
I would say, given the long-term nature and a lot of the skepticism around the value of climate impact investments, be prepared for a long fight, but don't lose faith. Make sure you understand what you're doing and why, and make that the basis of your faith in your venture, and stick with it. Persistence, belief and persistence, what you got to do. Any startup, but certainly in this space.
Cool.
Yeah, and don't, so time equals options. That's my one line. Make sure that you're not running out of time. Time equals options. Anything will do. Yeah.
And okay, I will finish it up with like don't end up without money. Like so make sure you have runway, and don't get yourself in a position where you're desperate and try to. I know it's hard, but you're doing a super important thing for the world, and keep on doing it. But make sure you're funded, so you all have more options.
Yeah.
Super. Thank you very much, you guys. We will end the public session, and we will move to one-on-one with startups.
Yeah. Thank you, everybody. You can connect on LinkedIn as well if you want to, and let's keep in touch.